Well, good evening. We are EdgeFund, a very different type of hedge fund. And why? It's because investors have rewired. The concept of measured risk has evolved, and demand for sophisticated investment products is only increasing. Investors want transparency, they want control, they want customization across their investments to match the same instant information and access that they get in the rest of their digital lives. Traditional hedge funds remain slow to address these investor needs. This change in investor thinking is occurring against the backdrop of a $1 trillion generational wealth transfer that's currently taking place. This new generation is cashed up, they're tech savvy, and they're mobile first. So we've created a new user experience. Why? Because the investors have rewired. We want to give investors the single best user experience that we possibly can. Most traditional funds focus on trading results only, and we also care about the results. But we've simplified and improved all of the other parts as well, across user acquisition, suitability, product access, KYC, reporting, risk, and control. We'll get to this shortly when we show you our app in a second. The app is underpinned by a new platform that we've built for fund managers. Why? Because to change the user experience for investors, different tools are required. It's tech-led, so it drives down the cost of doing business and it increases the level of automation. It's cloud-based, it's globally scalable, and it's both broker agnostic and product agnostic, which allows for more trading accounts, more users at scale, and critically, a smaller amount of money in each of those accounts, typically as little as 50,000. So, we're lowering the barriers of starting a fund for fund managers, and we're delivering a best-in-class user experience for all of those end investors. Over time, we'll grow our ecosystem to hundreds of fund managers and thousands of end investors. We control and manage every aspect of that experience because it's our app that's in the hands of the end investor. We own the connection between them and the fund manager. We own and run the ecosystem ourselves, and we manage the money flow. Ultimately, we'll take the top performing strategies on our platform, launch our own best-of-breed fund, a fund of no funds, effectively an index of the top performing hedge funds within our ecosystem. But critically, we won't be running any of our own strategies, so our own trading risk will be limited, minimized, hence a fund of no funds. So we get paid by the fund managers to use our platform. We also get paid by our own investors to access a new investment product. So now I'll just show you the app. So there are many parts to our app, but in the interest of time, we're just going to show you 3 parts. So we've got KYC and professional checks. These are relatively standardized these days, but it's still painful for many people. So in our app, we've automated it. We've also automated the qualified investor checks, which vary globally per region. But wherever the end investor is, they can scan their documents quickly and efficiently. This was previously a very manual process. If we come out of KYC, let's say you've passed through KYC, you get to a summary page of your account. This is Philip Gent. He's got 60,000 in his account, as you can see. So once KYC is complete, an end investor can see their trade reporting and risk. They can see their cash balance, leverage ratio, ROI, leverage value. They can see their account balance in near real time, their cash profits, and their leverage value. They can see their P&L, so they can see their daily, weekly, monthly P&L. They can also see the stocks that they own, and they can also see their portfolio. So this is Phil's entire portfolio. He's got 98,000 in the market right now, exposure. On top of that, and finally, in addition, uniquely, each end investor can also customize their portfolio. Because 80% of people lose all of their money trading their own portfolio, here they can adjust their risk settings, and the fund manager can trade within these constraints. So they can adjust their maximum leverage, their maximum position sizes, their default order sizes, and so on and so forth. Thank you for listening. With that, we're very happy to take questions.
So questions for Pete. Here we go.
So as a fund manager, you're trying to attract fund managers to this platform.
That's correct.
Is this not taking control away from fund managers? Is that not a barrier to them engaging with the platform?
It's actually fully flexible. So if you're a fund manager who wants to be on our platform and you your strategy is to be twice levered, and that's the parameters that you set. You're in control of how you control your investors. So let's say I'm a guy with 10 million, and I've got 10 investors who've given me $1 million in their own accounts. You can manage those accounts at scale. If you lay down the law and say, my strategy is 2 times levered, that's it. Those are the terms that you set. But we also have the option, which we think is very useful and very innovative. If you're running an equity strategy, for instance, a lot of people, as I said, lose all their money trading. 80% of people, that is on the front of every brokerage page. So we're putting strategy, offering people the chance to put strategies around these investment strategies. They can tailor what they like. A lot of people will leave it as default. But let's say that your broker offers you 20 times leverage. As a fund manager, you want to cap it at 10 times leverage or 5 times leverage. Maybe as an end client, you only want to be twice levered. So you put in 50,000, you want your maximum exposure to be 100,000. It's up to you. But you can change it in real time.
So Hugh Half-Thompson, this, I guess a couple of questions. Is this live, and how much funds, if it is, how much funds have you got in it?
Good question, thank you. It's been running live, not launched to the general public. It's been running live for a year or two now, so we know that it's up and running and it works. We've just raised 500,000 to take the product to market and launch the entire ecosystem, and we're in the middle of talks with various partners.
So I used to I built the BNY Mellon hedge fund business from scratch to 2 billion. So my background is hedge funds. And I could see that this would be really good for an individual trader, like an individual who wants to do their own thing. But the reality is, a hedge fund has got their own risk management systems, platforms, integrations, and they've developed it. So we built something called Advantage, which we built over 10 years. It was the most advanced system in the world at the time. And so I can see individuals using it, but I can't see a large reputable hedge fund using an app to run the business, because they've built their entire infrastructure to be proprietary, knowing that all the data, the algorithms and the trading that they do is only used by them and no one else will ever know. And the concern for them would be, if it's out there, how do they know? So I'm just curious to know. I think for small traders, I could see it working. For bigger funds, I don't think they would be willing to use it. That's just my own opinion, so I'd be interested.
No, that's a good point. So if you're Citadel, then you're probably not going to use this because you've got 20, 30 billion under management already. However, for an emerging fund manager, your options are very limited. So someone like myself, let's say I've persuaded people to give me 15 million, right? 15 different people have given me $1 million each. They've got it in their accounts. This allows me to manage that at scale. So if I want to buy them all Google at the same time, wherever they are in the world. So let's say one's in Hong Kong, 3 times levered. One's in Dubai, he's once levered. One's here, he's up to twice levered. You can manage all of those at the same time at scale. So what we're not trying to do is go toe-to-toe with Citadel. What we are saying is, if you are an emerging fund manager, your options are very limited. You can spend £250,000 a year on a Cayman structure. This platform neatly fits in the middle, and actually we think it's so good that once you're in the ecosystem, you're never going to leave it. And that's a big enough market for us. So, at the moment we're having discussions with a partner in Asia. They are in 5 different countries in terms of their regulatory licenses: Australia, Singapore, Hong Kong, Thailand, Vietnam. And people keep coming to them and saying, look, here's my problem. I've got this money, I've got a track record, I can't afford it. That helps them establish their track record, and that's passive income for us.
Thank you. Pete, thank you very much. Thank you.
Thank you.